So if there is a risk of insolvency, the board must take measures to guarantee the company's solvency. That's the principle, which means that the board needs to assess what is the situation of the company in terms of over-indebtedness and capital loss. In case of a loss of capital, the board must take remedial measures. There is no real obligation for the board to elaborate a cash flow plan, but such a plan will almost always be the basis for the remedial measures. So I think the strong advice is, whatever the law says, to have a cash flow plan, especially in situation of loss of capital or over indebtedness. That's important. Of course, if the company is over indebted, except in certain conditions, the board must inform the court and file with the court. What it means in day-to-day management is that the board of startups and SME who have I would say cash flow constraints is to constantly monitor the cash flow and the capital coverage and be ready to act promptly.
Yeah, because we hear now there is something that says the board of directors must act with celerity. So is it something that really now say in a law that we can't wait and we have really to be prompt in reacting, right?
Correct. I think in reality, the principle has not really changed, but it was not stated that clearly in the former law, but it was still what applied in saying there is a duty of the board to act promptly in case of imminent insolvency. But I think now that it's written black and white in the law, it probably raises a bit the liability threshold and the personal liability of the board in saying there is this sentence very clear in the new Article 725 CO that says that you have to act avec célérité in French, to act promptly. And but in any case, I mean the assessing the board compliance with its obligation will always be subject to the business judgment rule, and a judge or a court will have to consider all the circumstances. So the court will probably assess two things: is whether the board has acted, fast enough. So with this concept of promptly, and then whether the board has tried to use, all the tools that were available. And the idea is not to have an overly anxious board, but to have a board that knows the tools and is able to see whether some of these tools in the toolkit can be applied in a specific case.
Yeah, no, absolutely. And this deep control over the finance and trying to look further is so important, at least to be prepared to act promptly.
Mm-hmm.
So we have some clarification about the law that have been brought in terms of loss of capital. Can you tell us a bit what has changed?
Yes, correct. The law has specified a bit, how to determine loss of capital. So a company has a loss of capital if the most recent annual accounts show that the assets less the liabilities no longer cover half of the sum of the share capital plus the statutory capital reserve not repaid to the shareholders and the statutory retained earnings. And if a company is in a situation of loss of capital, a big change now is that if the company doesn't have auditor, it has the obligation to appoint, licensed auditors to do a review and to be able to present this review to the general meeting. And the board may, of course, in such a situation, take all measures that are within its competence, and then propose to the general meeting other measures that are within the competence of the general meeting. What are these measures? I mean, the measures are like reevaluation of assets with the current price, based on objective criteria. Corrective measures, such as obtaining this subordination declaration. postposition or reevaluating, property or shareholding in another company. You have also the possibility to dissolve provisions. If you have some provisions that can be dissolved, that's probably more for SMEs than for startups. So there are a number of measures like that that the board needs to consider and apply if it's within its competence, respectively ask the general meeting to resolve on.
And this question about convening the AGM, so now we don't need as board member to convene immediately the AGM, is it right?
That's right, not necessarily, because now that there is really, in saying part of the tools are certain tools, they are within the competence of the board, so the board should be free to act based on what he can use in his own toolkit without going to the AGM immediately.
Okay. Speaking about startups and SMEs that are at risk of bankruptcy, now we have this question about the 90 days that are written in the law. So again, is it really a change, or is it just something now we write clearly in the law?
No, it's not really a major change from the practice. It's also important to know that the board of a company that is over indebted according to 2 interim accounts does not have to notify the court in 2 cases, if of course there is a subordination, or there is a reasonable prospect that the over indebtedness can be remedied within a reasonable period. And this is this reasonable period where you speak about this 90 days after submission of the audited interim accounts. And that the claims of third parties are not, if the claims of third parties are not jeopardized in such a situation, that's a case where you can wait. So it's more to say there is a certain, leeway during which you can try to solve the situation. It just, stated a bit more clearer than before.